Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Apple report for Wednesday, December 7th, 2022. Before I jump into the charts, just please want to encourage you to please click like each and every time you watch the daily Apple report and watch the daily Tesla report. Also, subscribe to the Wicked Stocks YouTube channel if you haven't already. That'll provide you notification each and every time we upload the daily Apple report and daily Tesla report. Let's start with this chart. Just once again, a reminder that 148.95 represents mid to longer term resistance, two-thirds speed line projected off that August high, based in part on the October low. It contained the follow-through buying pressures in both October and into November and early December, because we actually pushed through this speed line on Monday, backed off, closed negative on the day, sold off on Tuesday, and we remain holding below 148.95 in reach of 123.78 by the end of January. And I'll keep mentioning that as long as we keep holding below this 148.95 speed line. On the way down, we do have meaningful support at 139.11. We may test this channel bottom today, Wednesday, 139.11, able to contain selling possibly through the rest of the week. And from there, we could rally back into the upper 140s again, that speed line, within 3 to 5 days is possible with the present volatility. Now, on the way up today, I do have carefully chosen minor points. The most notable is 145.77. I suppose I could have labeled that. That is nothing more than the low of Monday's high. So, and you can see that we've got a history here in the 145 handle. So 145.77 can contain intraday buying pressures, possibly daily buying pressures, and below which 139.11 is in reach today. 139.11, once again able to contain selling through the rest of the week, and once tested, we can round back up to 148.95 within 3 to 5 days, which is once again that long-term descending two-thirds speed line. If we do close today, a couple of things below 139.11. First off, it would be consistent with what we're expecting anyway. So closing below 139.11, I think, would be a downside accelerator, whereby within 2 to 3 weeks, perhaps by the end of December, we could fall all the way back into the low 120s, 123.78. On the way down, of course, we have 134.37 is the low of October. 134.38 was the November low, double bottom there. On the next attempt, I hate to call it a session level or even a weekly support level. I just don't see a triple bottom here. I think the key downside pivot point is a settlement below 139.11. So keep that in mind. Closing below 139.11, you may consider scouting out 122, 123 out of the money puts that don't expire for at least a month. I would say you might go a little further out just to preserve that delta and less susceptible to theta, the time decay element. That 123 handle support is really also found on the weekly chart. This is a weekly bar chart of the same data. 123.74, the start of a range down to 118.87, narrowing gradually. This is a rising two-thirds speed line off that March 2020 COVID low that, if tested, say, over the next, by the end of January, can absorb selling through Q1 and perhaps even into later 23. So that kind of covers the downside. Let's talk upside today, that in the event we happen to push through Monday's low of 145.77, we can, on an intraday basis, retest that speed line at 148.95, where once again we can top out through December and below which 123.78 in reach by the end of January. Now, if we do close above the 148.95, as I've been saying, this presents a nice buy signal through the rest of the week and into early next. I think over the following 3 to 5 days, we should reach 157.52. As I've been mentioning, there is a case to be made that a mere settlement above 148.95 would suggest the low 180s within a matter of 3 to 5 months. But I really don't want to anticipate the low 180s unless we close above 157.52. So holding below 148.95, the low 120s in reach by the end of January, and if we close above 157.52 in the coming week or two, the low 180s in reach by the end of January. This 148.95 to 157.52 area gradually widening, kind of a no man's land of longer term trend identification, but it is worth a 3 to 5 day swing trade if we close above 148.95. And if you are long 120 out of the money puts right now, because holding below 148.95 will keep that 123 handle support in reach over the next couple of months. If you're long those puts and we close above 148.95, my recommendation would be to liquidate them. And if we close above 157.52, my recommendation would be to buy 180 out of the money calls that don't expire for at least several months. I think that pretty much rounds it out for Wednesday's Daily Apple Report. I'll be back tomorrow with Thursdays, and you have a great evening.